Good evening. I'm Elizabeth George, Chief Membership Officer with the American Guild of Organists. And I think I have a captive audience here of people that really want to know more about how to regain their tax-exempt status. So before we start and I introduce our presenter, just a couple of housekeeping issues. You are muted, but we do want to hear from you. So please post your questions in the Q&A icon at the bottom of your screen. I'll be monitoring them. And at the end of Alexander's presentation, we will address your questions. So let me tell you a little bit about Alexander Lazzaruolo. He is a tax partner with Condon, O'Mara, McGinty, and Donnelly, LLP, an accounting firm which specializes exclusively in audit and tax preparation services for tax-exempt organizations. Alex is a member of the New York State Society of Certified Public Accountants, the New York State Bar Association, the Association of the Bar of the City of New York, and the American Institute of Certified Public Accountants. He also serves on the Nonprofit Organizations Committee of the Association of the Bar of the City of New York. Alex practices in the areas of non-for-profit organizations, including foundations, religious organizations, public charities, membership organizations, social clubs, high net worth individuals, and their privately held companies. It gives me great pleasure to introduce to you Alexander Lazzaruolo. Alex, the floor is yours.
Thank you. Good evening. Thank you, Elizabeth. Thank you, everybody, for having me here. It's with great pleasure that Condon O'Mara is here to present today's topic on auto revocation and dealing with the IRS to regain your tax-exempt status. I'm just going to share my PowerPoint. Excellent. Okay. So as I indicated, today we're going to be talking about auto revocation and dealing with the IRS to regain your chapter's tax-exempt status and what to do after you get your tax-exempt status back. I'm going to go through a series of slides today with some general information, and then we'll hold the floor for questions once we complete the slides. As Elizabeth said, please put your questions in the chat, and we will be happy to answer those. Any questions we can't get to tonight, we'll be glad to get back to you at a later time. So what are the filing requirements for a tax-exempt organization? So those filing requirements require 3 different types of returns depending upon certain factors. You have your traditional Internal Revenue Service IRS Form 990, which is what we call the long form Form 990. And this is required when an organization has gross receipts on an annual basis above $200,000 or total assets in excess of $500,000. So these are your larger tax-exempt organizations. The other filing that may be applicable is an IRS Form 990EZ. These are your mid-sized tax-exempt organizations, and they're required when an organization has gross receipts below $200,000 and total assets less than $500,000. Finally, we have your smaller filing requirement for your smaller tax-exempt organizations, and this is the IRS Form 990N. This is required when an organization normally has gross receipts of $50,000 or less on an annual basis. My expectation here today is that most of the organizations in this presentation are subject to a 990N e-postcard filing requirement. So when are these tax returns due? The tax returns are due on the 15th day of the 5th month after year end. So, for example, if you're an August 31st year end, the due date would be January 15th. The 990N postcard, therefore, would be due on January 15th. If you happen to be an organization that's eligible for a 990 or a 990EZ, you can request a 6-month extension of time to file until July 15th of that year. The 990Ns do not have an extension applicable to them. However, as you'll see later in the presentation, the IRS does not provide for penalties for late filing of Form 990N. So where can one file a Form 990N? Well, 990N can be filed through the IRS website on login.gov. And that would require you to set up a username and account on login.gov in order to log in and file a 990N on an annual basis. Now, filing a 990N e-postcard is a relatively simple project once you are able to log in. You simply log in, indicate your EIN, and your organization will come up automatically in the IRS database. You then certify that your gross receipts in that given year are less than $50,000 by checking on the box that says gross receipts are less than $50,000. You confirm the mailing address that the IRS has on record, and you indicate who the principal officer is. And that's going to be essentially the individual that's responsible for the filing that year. Once that information is inputted in the system, you simply hit submit, and you should be all set. So as I indicated before, what happens if you late file? So there is no late filing for filing 990N. There may be late filing penalties for filing 990EZ or Form 990 late. However, all organizations are subject to what we call automatic revocation if you do not file for 3 consecutive years in a row. Okay, and revocation of the organization's tax-exempt status will happen on the filing due date of the 3rd consecutively missed year. So if your chapter's been revoked, what happens? What do you do? Technically speaking, if your exemption has been revoked, you are no longer subject to the IRS 990 filing requirement, but rather the Form 1120 filing requirement, which is a much more complicated tax form and potentially could subject the organization to tax. So this is not something that you would want to file, nor would you want to be in the realm of filing. So if you lost your exemption, we should be moving quickly to obtaining exemption back. And that's what we're going to talk about next. To have your tax-exempt status reinstated, you must file an application with the IRS, and the organization can also request retroactive reinstatement. So what that means is, if you are successful in your reinstatement, the IRS will reinstate your charity's exempt status back to the date of initial revocation, so as to indicate as if nothing had ever happened, so that there is no delay in terms of the time frame of your exempt status. It's important to note that an organization that loses its tax-exempt status cannot receive tax-deductible contributions, and you're not indicated in the IRS Business Master File database of tax-exempt organizations, nor will you be listed in the tax-exempt organization search as an organization eligible to receive tax-deductible contributions. So this is a very key and important point to note, because if you've been revoked, technically any donations that you received are not deductible to those donors. Contributions may be deducted by persons unaware of a change in organization status up until the point that the IRS publishes the name of the organization in the revocation list. So typically speaking, if your organization loses tax-exempt status, it generally takes the IRS about 3 months from that missed filing deadline for your organization to show up on the IRS database as organizations who have been revoked. Now, once your organization is successful in regaining tax-exempt status, you can then, once again, receive tax-deductible donations. Now, the key question here is, what happens if you lose your exempt status, and how can you get it back? Well, the IRS has set up different ways that you can get your exempt status back if you are to fall into that threshold of an organization that's been revoked. And in order to get it back, you're going to have to reapply to the IRS for exemption. And reapplying to the IRS happens in one of two ways: by either filing what we call a Form 1023 application for exemption, or a 1023-EZ, which is a simplified application for exemption. Now, a 1023-EZ is eligible, generally speaking, for organizations who are eligible to file a 990N. If you've lost your tax-exempt status, I urge you first to consider whether you are eligible for the 1023-EZ. The IRS has a series of questions online to see if you qualify. But as I indicated earlier, the main question is, did you qualify for 990N treatment before? And what that means is, are your annual gross receipts less than $50,000? If that is the case, you most likely will be eligible for the 1023-EZ, which is a very simplified online filing, once again through the id.gov username. And this will necessitate a series of questions online of indicating the name of the organization, the officers, what the organization does, a request that reinstatement be granted retroactively. And then it follows with a series of about 20 other rather simple questions. Once this is done, you hit submit online and you pay your user fee. Now, this is much different than applying via the Form 1023, which is what we call the full exempt application. This application requires extensive disclosure to the IRS, as well as submission of the articles of incorporation, bylaws, and a series of other information required by tax-exempt organizations. So filing a Form 1023 is a much more extensive and much longer process. So what is retroactive reinstatement? As I indicated earlier, you can request retroactive reinstatement so that you can be reinstated as of the date the IRS published your exemption was revoked. And what this means is, to donors, it's as if you've never lost your exemption. So if someone were to have donated in the interim time where your exemption was lost and you got retroactive reinstatement, it is now okay, because that donor would then be eligible to deduct that contribution. However, if you do not get retroactive reinstatement, that contribution remains ineligible for deduction. In order to get the retroactive reinstatement as well, you have to go back and file the 3 missing tax returns. And as we go to the next slide, you'll see when you request retroactive reinstatement, in order to file those 3 missing tax returns, even if you were eligible for a 990N previously, those 3 returns have to be filed as 990EZ short forms. And on the top of those forms, you would paper file and indicate retroactive reinstatement. So there are 3 different types of reinstatement that one can seek. There's streamlined retroactive reinstatement, which you would do if you are reapplying for exemption within 15 months of your revocation. And then there's retroactive reinstatement, which you do after 15 months. So if you've lost your exemption and it's been more than 15 months, you use the retroactive reinstatement provisions. The difference in these two are the retroactive after 15 months requires a reasonable cause statement to be submitted with the application. And what that reasonable cause statement means is you need to set forth to the IRS the reason why the organization did not file on time and what steps the organization has taken going forward to ensure that such issues do not occur again. Alternatively, you may apply for postmark reinstatement. I do not suggest postmark reinstatement if you can obtain retroactive. And what postmark reinstatement means is you'll be granted exemption based on the date you file your Form 1023 or 1023-EZ. The reason I do not recommend this is if there are donors that donate in the interim time frame, those donations remain not tax deductible. What is a reasonable cause statement? A reasonable cause statement, as I indicated earlier, establishes that an organization exercised ordinary business care and prudence in determining and attempting to comply with its annual reporting requirement. The statement should have a detailed description of all the facts and circumstances about why the organization failed to file, how it discovered the failure, and the steps it has taken to avoid or mitigate any future failures. So now I'm going to pause and we're going to open up the floor to questions. So any questions that anyone has on specific circumstances, I'm happy to take those at this time.
Alex, I think they're taking it all in. Does
Okay.
I think they may be seriously scribbling notes, but we'll do this as a handout, and certainly we can definitely be very
Sure.
happy to help you.
Sure. And Elizabeth, I see a couple of hands have
I
shot up,
do.
so I'm not sure if they're trying
Okay.
to ask or type.
Douglas, would you like to talk? I can allow you to talk. Douglas Rust.
Yes, hello. I just had a question for those of us organizations that make less than 50,000. Do we have to apply with the Secretary of State of our state as a charitable organization?
So that's a very specific question, and unfortunately, that is a state-specific question. So there is not one general answer. It really depends on the state that you are registered in.
Okay, thank you.
And here's from someone who I know, we all know, James Thomashower. James, you're unmuted.
Can you hear me? Am I on?
Yes, we
Oh,
can.
great. Thank you so much. Alex, what a fantastic presentation. Thank you so very much. That was really interesting.
Happy to be here, James.
Great. You did a terrific job. Some chapters have decided or determined that it's easier for them to go outside of the AGO realm and get an attorney or an accountant attorney like yourself and start all over as a nonprofit organization, as a separate, totally separate from the AGO. How do you feel about that?
So, James, in order to go outside, sometimes it really depends on the size of the organization. A larger organization that is not eligible for filing 990N, that may be subject to filing of Form 1023, the full form, may be better suited having counsel assist in that matter. As I indicated, that's a very long process. There's a lot of information that's required with a Form 1023. If an organization meets the 990N thresholds and can file the 1023EZ, I think it's probably better suited for the organization to attempt to file on their own, because the 1023EZ is a rather simple filing, and it would save a substantial amount of money. Unless you find counsel that are willing to help on a pro bono basis, generally speaking, counsel involved in a reapplication is going to cost anywhere from $5,000 to $10,000.
A lot. Alex, are you available to consult with our chapters on an as-needed basis for their questions to just following up this webinar?
Yeah, if there are additional questions after this webinar, I'm happy to take those questions on a case-by-case basis.
Okay.
Well, we do have a couple more. So
But-
here's one. How do I find my EIN number?
So that's a great question. So your EIN number, it should be in documents that you have on file, permanent documents from when the organization was established. If you cannot find your EIN, you can go on the tax-exempt search list. And unfortunately, at that point, you would have to search by name. The American Guild of Organists, you have many chapters, so searching by name is going to yield a lot of results. So you're going to have to use that feature to kind of sort by state and see if you can find your chapter in there to locate your EIN. And James, before we go into these other questions, I'm not sure if you have a follow-up question to that.
Yeah.
No, I don't.
I can follow up to that. AGO headquarters has on file the EIN of every chapter. So if you want to know your EIN and you don't know it, call or email AGO headquarters and we'll provide it to you. We have it on file.
There you go. Simple. Thank you, James. Bruce Webb has asked, how does the IRS define revenue for the form? For example, we sell meals as basically cost. Is the cost of the meals constitute income?
Yeah, so for purposes of 990N filing and the different thresholds, the IRS goes by gross receipts, and gross receipts are defined as all receipts that come in. So that's going to be, if you're charging the cost of the meal, the receipts, that cost of meal is going to be calculated as part of your gross revenue.
Thank you.
And just to go further, just for everyone else, the gross receipts is going to include any contributions you receive, interest and dividends, essentially any revenue that comes into the organization before taking out any costs.
Thank you. John Robinson has asked, is every chapter automatically a nonprofit under the AGO's nonprofit status? Sorry if I missed this in the presentation. James has got his hand raised. James, please.
Yes, the answer to that question is yes. Every single chapter is automatically a tax-exempt nonprofit organization by virtue of being a subordinate unit of the AGO at the time they were created as a chapter, unless you have failed to file your EZ form or your tax filing as required for 3 consecutive years. And then you could lose, through the auto revocation process, you could lose your tax-exempt status. But at the time you're created as a chapter, you are a tax-exempt organization.
Yeah, and just to further go off of what James had said, because when the chapters are set up, you fall under the umbrella of the AGO, there is no 1023 or 1023 EZ requirement at start. So once you get that exempt status, as long as you continue to file on an annual basis, you will continue to have your exemption. If you fail to file for 3 years in a row, you lose your exempt status. You also fall out of the group umbrella of the AGO's exemption. So that's why you have to go and get exemption on your own by filing a 1023 or a 1023 EZ. And I'm going to just defer back to James, who has his hand back up.
Yes, that was a great distinction. Thank you very much, Alex. Here's a question for you. Suppose in 1 year, a chapter which normally has very modest assets and very modest, not assets, but very modest gross receipts, by which I mean the dues are modest, you know, a couple of $1,000s in dues. And the donations are modest, a couple of $1,000s in donations, and money received for potluck dinners and for other activities are modest. But all of a sudden they get a bequest, and the bequest is $50,000. You know, it just comes in. Does that knock the chapter out of the position of being able to file the EZ?
So that's a great question, James. And the answer to that question is it could. So the IRS defines gross receipts normally under 50,000 as the average gross receipts over the last 3 years. So in your example, let's say they had 10,000 1 year, 10,000 another year, and then 50,000. That's going to be 70,000 over 3 years divided by 3. You're still going to have average gross receipts less than 50,000. If you were to be so lucky as to get a bequest in 1 year of $200,000, that would then trip you over to the 990 EZ requirement, which would be a fairly nice requirement to have after getting a bequest of $200,000.
It would be, wouldn't it? Well, it was funny. I was chatting with Alex before we started, and I said I could recall a couple of chapters who just got so frustrated and just couldn't continue anymore with this process that they said, forget about it. We're going to close and rename our chapter, file for a new EIN number, and start over. And I don't know, would you advise that?
I would advise to go down the process of obtaining your exemption back. I think there's a lot of legal maneuvering that technically speaking would go into that. It is an easy approach, and possibly for a smaller organization, it would go unnoticed. But the proper legal technique is to obtain exemption back.
Okay, there you have it. So now we know. Well, I don't think anybody has any more questions, but as you said, everyone can email me if they do have additional questions for Alex, and I'll be happy to forward them to him. And Alex, what we'll do is we can make a PDF out of this presentation and then send it to everybody as a handout.
Absolutely.
And I just want to thank you so much. I cannot tell you, people have been, they're feeling, I think there's a lot of relief. People have a greater understanding of what they need to do. James, did you want to comment and say something?
Thank you, Elizabeth. Yes, this is such an important webinar, and Alex has done such a great job. Elizabeth, thank you for setting up this webinar. Alex, thank you for a superb presentation. And I want to make it clear that the AGO National Headquarters supports every chapter in their efforts to maintain their nonprofit status. Please don't hesitate to check in with Alex. His information is terrifically up on screen and has been here for a while. And Alex, if there becomes a cost because there are a lot of people checking in, AGO National Headquarters will bear the cost to support our chapters in regaining their nonprofit status, their tax-exempt status, that is, as needed.
Excellent.
Wonderful. Okay, we've got it on record now. Thank you, James. Well, Alex, thank you again. And I want to thank all of our participants for coming tonight, the good questions that you asked. And I just want to remind everyone that our next webinar is next Monday, September 30th. The Weekend Organist, J.W. Arnold, will be presenting a very interesting webinar on contemporary music for traditional organists. So I want to thank everybody again. Everybody stay well, and we hope to see you soon.